Hi, this is Zach here with the weekend edition of the Bulletin Board Heroes here at Zach's Traders Cafe for Sunday, the 23rd of February. Starting off with the FTSE 100, which is backed off quite a lot now from the peak there that we had in the middle of the month. In fact, the peak there on the 13th, which went for, or actually agreed with my personal adage of buying on bonfire night and selling on Valentine's Day, so almost spot on there. For that particular rule. We're back down at an uptrend line there from the middle of January, and that's currently running around 86.40, the low on Friday. Below that, 8600, and then perhaps down towards the 50-day moving average, 84.40 would be the risk, but ideally we stay on the right side of 8600. Moving on to the DAX, which despite all the political turmoil has actually been recently at record highs. Here you can see we have come off the best levels, slightly adjusted that rising trend channel there from November to fit in with the peak that we've had recently, so 22,900. And we've got the risk now of a move down to the floor of the channel at 21,700. There's a gap to fill just below that, 21,600, so also something to think about. If we want a new buy signal, then it would be the end of day close back above the top of the recent gap, 22,300, to get us back on track for a move to 23,300 by the end of next month. RSI still above neutral 50, so this hopefully is just a buy the dip rather than sell the strength at this stage. Moving on to the Dow, which had a rather sad end to the week with the market falling below the 50-day line, which is also falling at the moment, which is not a great look, 43,700. The floor of the rising trend channel there from March last year, currently at 42,800, and that's the risk at the moment, as is the extra risk of this market filling the gap down to 42,600 and the 1st January gap floor left behind. We want to see a fresh leg to the upside. The minimum requirement now is an end of day close back above that 50-day line, 43,700. On to Bitcoin, which has remained in its recent rather frustrating range, uptrend line there from November, so that's running at 94,000. 50-day line there at 99,000, so a range of $5,000, and amazing that we've stayed within that since the beginning of the month, or almost universally stayed within that. If we do break down below 94,000, then there's a risk of a move down to the floor of that rising trend channel from April, 92,300, and then below that would be the risk of a test of November support on the way up at 85,000. But at the moment, not really expecting any sustained price action back below 90,000, and if there is a buy trigger to be had, it would be an end of day close properly above that 50-day line at 99,000. Moving on to gold, which has behaved itself very well over the recent past, despite the odd slight wobble below 2,900. Recent support has come in at 28.75, and above that we're looking at the price channel top there, and 30,000 over the next couple of weeks. I suppose the latest would be the end of next month, if that proves to be too much of a psychological level. Moving on to the stocks, and starting off with Cirata, which has managed to revive itself. It did this before. We've had a couple of full storms before. The main one was in December, another one in January. I suppose we were due one now, but the good thing about this particular rally is that we closed very well at the end of the week, so opening at the low, almost closing at the high of the day, which is kind of what we did at the beginning of December. So looking for potentially a move up to 31 pence in the top of that broadening triangle from November. We've got an uptrend line there in the RSI window as well, and 31 pence on tap, especially while we remain above the 50-day line there at 22 pence. Stop loss at the moment at 20 pence, which is the breakout level through that summer 2024 resistance line. Onto a stock which is always rather difficult in terms of the charting, and I suppose everything else as well, but decent move here for Corcel, in the sense that we've had an unfilled gap to the upside at the start of the week through the 50-day line, and we've maintained that, so it's basically a bear trap reversal from below 0.16, the initial February support, and while we remain above 0.16, looking for 0.28 at the top of that rising trend channel that we've got there from the beginning of August. Rising trend channel base is what I was looking for. So above 0.16, looking for 0.28 on that stock. On to Eqtec, which is having a rare moment in the sun at the moment. And here, the 50-day moving average, well and truly broken at the end of the week. Wednesday saw the first break, and then Friday, another move, opening at the low, closing at the high. So those strong candles suggest that there will be enough momentum to take the shares up to 0.86 and the top of that falling trend channel there from back in April last year. Ideally, we stay above that 50-day line, now rising at 0.5 pence. On to a couple of stocks which are direct play on the situation between Russia, Ukraine, and I suppose America as well. Here we've got Eurasia, where we had a slight overshoot on the downside after the peak through 7 pence, which actually was an overshoot on the upside. We were hoping that above 4 pence we'd go up to 8 pence, and maybe that's still the case now, but recent low at 3.6 pence, basically testing the old September resistance as new support. 50 and 200-day lines now rising, so it does suggest that we've got the chance of a retest of the 7 pence level, and maybe up to 8 pence is the best case scenario target by the end of next month. But obviously we are rather influenced by the peace talks, or alleged peace talks, that are in the mix at the moment. I'm going to see whether the line I'm drawing at the moment and the upper parallel of that will then kick in for the shares to give us that target towards 8 pence within a rising trend channel from November. Moving along to Ferrexpo, which has been, I suppose, a white-knuckle ride and a bit of a nightmare, really, in the sense that we looked as though after that rug pull that we had at the beginning of the month, we were home and dry, and potentially even moving up through the £1.15 area to go to a higher new level, or a higher new target as high as £1.50, but it was not to be. Maybe the second time lucky, while we're above the 200-day moving average at 66 pence, looking for 90 pence originally, the old support, and then back up to £1.10 plus. The real issue here is whether we can hold that rising 200-day line. Moving on to a requested stock, and one which is normally quite well followed, and here we have Mosman. We broke the resistance line there, 0.03 pence. We did that at the end of last month. We've got a rising 50-day line, and we are shuffling along above a rising 50-day line and below a rising 200-day moving average. This looks like a positive consolidation, especially when combined by the way that the RSI is still above neutral 50. So probably now an end-of-day close, or as little as an end-of-day close above the 200-day line at 0.041 could take us up onto not only the 0.5s, but even as high as the 0.08 level, perhaps now by the end of April. But if we're lucky, it would be by the end of next month. Need to stay above that 50-day line at 0.032 all the while. Moving on to a stock where there was a rather large placing at 0.5 pence, and it looks as though the churn has been taken up. So good news for Oxford Biodynamics. The longer we stay above 0.5 pence, the greater the chance of a move up to the top of that broadening triangle as high as 0.95 pence by the end of next month. Very encouraging candles on Thursday and Friday, opening at the low, closing at the high. So that does suggest there's a bit of proper momentum here. And I think there was some decent news as well, or relatively decent news during the week to help the situation along. Ideally, we stay above that 0.5 pence level. On to the last two, starting off with Petrel, and here the picture looking rather better than it has for quite a while. Bounced off the sharply rising 50-day line there at 1.25 pence, looking for 2.5 pence by the end of next month, on the basis that we have the 200-day line hopefully turning higher relatively soon as well. Stop loss there, the 1.25 pence level and the 50-day line. Slow burn higher for Upland, and here you can see that just approaching top of that rising trend channel base and the top of the range, recent range of 1.5 pence. Above that, or above 1.55 pence, which is the line from September, looking for 2.2 pence or above by the end of next month. That's it for me today. More updates tomorrow.